Good morning. You're watching The Market right here in ET Now with me, Ayesha, Faridi, Avanne, Dubash, and the World Cup fever has definitely struck the ET Now studios.
Absolutely.
We're all geared up for the mega big cricketing event today.
And it's the religion in the country. It's going to really take everyone by storm, and they're going to be glued to their screens, and we're going to celebrate as best we can.
Absolutely. It's one trophy, billion fans, Indians all across. In fact, I mean, all the participating teams, right? So through the next month and a half, this is all that we're going to do.
Absolutely. There's lots of prominent players as well that we're clearly watching out for. The fact that there is so much buzz. There's been crazy fervor when it comes to even buying tickets for the World Cup. Hotel prices have soared. It's a huge event, and that's what we're going to be celebrating today on ET Now. So it's a day that you do not want to miss our programming, because we've got a special edition lined up over the next hour or so. But for now, Ayesha, let's decode the markets, and it's clearly the heavyweights that led the recovery.
Led the recovery and led the fall as well, right? So while HDFC Bank did recover from the session lows and rubbed off on the index, so we didn't close sub that 19,400 mark, but you didn't see any meaningful recovery on a Reliance, on an ICICI Bank, and Axis Bank was the one which really weighed heavy amidst the banking counters, and that was the one which really saw a big amount of pullback coming in. So yes, you know, while HDFC Bank ADR has surged overnight, you've seen a big recovery in the Infi ADR as well, over a 2.5% kind of gain. But I think the niggling worry continues to be the mammoth FII sell figure. Yes, sure enough, there are block deals as well, which are added in there, but a 4,000 crore rupee sell-off by the FIIs in trade yesterday, that is a little bit alarming. It was about 2,500 odd crore rupees the day before as well. So let's see, you know, where this actually goes forward, because while we did recover, we are definitely brittle, and it's the private banks and the key heavyweights that are leading the fall, Avanne, on a daily basis.
Yeah, just looking at, you know, the constituents on the Nifty losers list, and yep, that's dominated by the likes of an Axis Bank, something like even an IndusInd Bank buckled under a bit of pressure as well in yesterday's trade. But yes, you did see an HDFC Bank or a TCS for that instance, or even a Reliance Industries that did manage to lead that late recovery. That aside, then, let's also take cognizance of what's happening across the globe as well, because we're mapping out the fact that Wall Street did manage to snap that three-day losing streak. So in the regular trading day, you had the indices which ended the session higher, the S&P 500 gaining about 1% or so. The Dow in comparison gained about 1/3%, and tech-heavy NASDAQ, that was a bit of an outperformer. But clearly, there has been a retreat in the Treasury yields as well that we're monitoring. The 10-year Treasury note has slipped from those highs that we saw last in the year 2007, and that's largely on the back of the payroll processing data, the private job growth that came in, and yields. That, I think, is going to be the talking point. They will continue to remain in focus, given the fact that we are seeing some warning signals as well from the bond markets. That aside, yes, we did see a pull back from the bond yields from those 16-year highs. Oil prices, they continue to fall, so sinking more than $5 a barrel, and Brent now quoting close to $86 a barrel, largely on the back of those demand concerns. In fact, let's take forward that conversation then on what's happening across the globe with Ed Yardeni. He's President and Chief Investment Strategist at Yardeni Research. Thanks so much for taking time out. And do you think that it is going to continually remain in focus, the yields, given the fact that the bond market is continually sending a lot of warning signals?
Absolutely. And I think the bond market's been the major source of aggravation for equity investors. It's why the stock market's been so weak in September and here in early October. But on the other hand, if it stabilizes, that should lift the stock market and become less of a concern. And I think we may find some stability here, maybe between 4.5% and 5%. I think the drop in oil prices is a very good development today in that regard. I think inflation is going to continue to moderate. I think the economy is going to slow, and that should help to lift stock prices in the U.S. and maybe give us even a year-end Santa Claus rally.
Yeah, absolutely. But you know, Ed, the bigger concern is while overnight we may have seen the yield retreat from those 16-year highs, we're not quite out of the woods. What does it then spell for emerging markets like India? I mean, momentum is with us, valuation is not. Is that combining bad news with with the way US yield is panning out on how the
Well,
FII flows could be?
Well, I think in this case, today's action here in the U.S. and around the world, really for India, it seems to me that the $5 drop in oil prices is of much greater significance than this decline in the bond yield. And if we get both of them, if the bond yield stabilizes and oil prices remain low, then I think that would be a big positive for India. Obviously, India is an important big importer of oil, and having the price of oil come down instead of going to the feared 100 to 120 level, which would be bad for everybody around the world. I think even the Saudis realize that even though they'd like to sell oil at $100 a barrel, that's just the world just can't take that kind of level. That it's got to be lower than that.
Right, and what's the sense that you're getting then, Ed, when it comes to the overall sentiment as well on Wall Street? Do you believe that adopting a fairly cautious approach is going to be the need of the hour for some time now?
Well, Wall Street's been pretty pessimistic for a while. I don't really quite understand it because Wall Street tends to sell stocks. It's like being negative on your own product. But I think Wall Street was overly pessimistic and bearish last year. Wall Street did not see the bottom in the market last October, and now I think Wall Street's turning pessimistic again. They're still talking about an imminent recession. They're talking about all sorts of credit calamities, a debt crisis. Look, I think the hedge fund community really believes that the bond yield is going to go well above 5%, and they're all short the bond market. So if the economy slows, inflation moderates, oil prices stay down, a lot of these short positions in the bond market are going to have to be lifted. And I think that's some of what we saw today.
And perhaps you might want to shed some light in terms of the crude oil price trajectory as well and what the implications of that could be.
I mean, that's a great development. I didn't really think that the price of oil is going to go to 100 or 120, and there was some talk of that. I don't think the global economy is strong enough. China's weak, Europe's weak. The U.S. looks strong in the third quarter, but I think we're going to see some slowdown. I don't think we're going to have a recession. I haven't been in that camp. And so I think this drop in oil helps to offset some of the fears that we've had over the past, really during the third quarter, that higher oil prices mean higher gasoline prices, and that in turn could spark another wage price spiral. But now with this break in oil prices, which I think is a very significant development, that's good news on the inflation front. And we did get weekly data that's showing that in response to higher gasoline prices, guess what? People are driving less. And so gasoline consumption's down. So it just gets us back to the old saying that the best cure for high commodity prices is high commodity prices, and it's working like a charm right now.
It sure is, isn't it? Ed, great having you on the show today. Thanks as always for taking the time out.
Thank you. All the best.
Okay, that's the word coming in on what the global setup is looking like. By the way, this morning you've seen a big move across Asia, so quite a bit of relief rally, given that you've seen a retreat in the bond yields. And Asia is all holding up. The GIFT Nifty is indicating a bit of a flat start for us. So if not a good move upwards, at least we can see some amount of pause in the selling for sure. At least that is what the index is indicating so far. But talking about crude prices and talking about inflation, just looking at the kind of trajectory that we've seen so far. And this is by, the RBI estimates. For FY24, it seems that inflation is going to settle around that 6.5% mark. We've already seen a cool off from what we saw in the second quarter, wherein inflation was pegged at 6.5%. Q3, we saw a dip coming in to 6%. And then again, in Q4, what's likely is 5.7%, which of course brings us to tomorrow MPC outcome. And what is it that one can expect? It's a pause, and that is what the street consensus seems to be hinting towards. And a hawk hawkish one at that. At least that is what we are anticipating. The downside risks from inflation, that's something that we're going to look out for. It's clearly been proven that inflation is transitory in nature. We've already seen a cool off coming in. But yes, oil continues to be a niggling worry. You have seen a retreat of about 5% overnight, but is that the new normal? Is it going to be sustainable? Or are we going to again see a spike all the way to those 95 odd levels on the on the Brent? That's something that we need to look out for. And of course, time and again, we've heard the finance minister as well as the RBI governor as well talk about what the global central bank action is and the risks globally. So the commentary on that is something that we're going to be looking out for. The rural demand trends, US credit rating, the corresponding impact, CAD as well as forex reserves. These are some parameters that the street is definitely going to be eyeing out for. But that said, it's the business of cricket also, which begins here in India. A lot of talk around whether this is going to really up the consumption. What are the trends that are going to emerge out of this, Avanne?
Absolutely. And there's so many various fields, when it comes to cricket. There's, of course, the TV rights, screening, ticket sales, merchandise, foreign tourists, all of that. And there's an interesting note as well that has come about. This is from Bob Cap, and they're expecting a boost of close to 18 to 22,000 crore rupees in terms of the gross output, though they have acknowledged that the upward bias in inflation could be about 0.1 to 0.5% for these 2 months. And the last Cricket World Cup, it was in 2019 in England. That was a resounding success, and therefore that contributed very handsomely to UK's GDP. So perhaps the same could be replicated back home, and they believe that the World Cup does have the potential to really boost India's GDP, more so because it's coinciding with the festive months. So that as well is going to be an added booster shot as well. It's concentrated a lot though to the services sector. The hospitality sector, as we've seen, prices going through the roof, is likely to benefit the most. And just to put it into perspective, they have broken it down in terms of what the base case and the optimistic case scenario could be for various categories. For example, for TV rights, they're talking about a base case of 10,000 odd crore rupees, 12,000 crores optimistically. Screening, food delivery, ticket sales could generate close to 1,600 crores. And foreign tourists, on an optimistic scenario, could be about 600 crores. Merchandise, close to 200 crores in an optimistic scenario. So clearly there's lots of fervor, fever, and that's what really all Indians are going to be glued to, that one trophy, and there's going to be a billion eyes on those matches.
In fact, it's countdown now to the most awaited event of the year, the Mega Cricket World Cup. That's going to kick off today in Ahmedabad, with defending champion England facing New Zealand in the first match. In fact, Harsh is here, and he's going to tell us about what all is in store in terms of matches. And of course, there's Sharad as well. He's going to talk about not just Team Blue, that hopefully will win big, but also what is it that we can see in terms of the demand for their services, products, the business of cricket. But Harsh, you go first.
Well, yes, 10 teams, Ayesha, all of them going to be competing for that prized Cricket World Cup, the biggest prize in cricket, Sharad. And, we have 48 matches. 45 of them are going to be round-robin matches, followed by 2 semi-finals and a final. The final is going to be in Ahmedabad as well, and every win will give you 2 points. And, of course, the 4 top teams will go into the semi-finals of the Cricket World Cup. Very quickly moving on, you have currently in terms of the ranking, you have India ranked 1, Pakistan ranked number 2, very close behind, just 1 point difference between both those teams. And then there's Australia at 112 points, 3 points behind Pakistan at number 3. You have the number of wins in terms of World Cups. You have Australia, who's won the World Cup 5 times, Sharad. India as well as the Windies have won it twice. Mind you, the Windies are not playing this time around because they didn't qualify. So that's something to keep your eye out on. And then you have England, Pakistan as well as Sri Lanka, who have won 1 World Cup each. 13 World Cups in all have been played as of now. This is the 13th one rather. Quickly moving on, you have India, which has qualified automatically. It's co-hosted 3 World Cups in the past. It's the first time India is hosting it exclusively, and of course that will keep the host nation very, very clued on in terms of its viewership. Also about the World Cup, you have the cup, which is made of pure gold as well as silver. 11 kgs is the weight, 65 centimeters is the height. And the winning team actually takes home the replica because the original is kept in the headquarters in UAE. Some trivia there just before we kickstart. In terms of the matches, well, the first match is going to be England versus New Zealand, which starts today. The finalists of the last World Cup will play the first match in Ahmedabad today. India plays its first match against Australia on the 8th of October, after which, of course, there is one more key clash, and then there is the India-Pakistan, much awaited on the 14th of October. Definitely not going anywhere for that one, unless you're going to Ahmedabad, nowhere else.
Yes, we have been actually discussing about that throughout our team, that has anybody got the tickets for India-Pakistan match, and that is where I think the entire discussion has been happening over the last 1 week, Harsh.
And the price of the ticket, right, Sharad? So, so that as well. And then on the 19th of November, you have the final, which will again be held in Ahmedabad, Sharad.
Well, yes, now let's look at the consumption part of it, and of course, how the stocks will actually react to it, and that is something which we have actually gathered a list of it around. Of course, the media stocks would be in focus because of higher ad revenue spend coming in, and the gaming would be there. Hotels is something where the occupancies have gone up, especially in the host cities. That is where we are seeing the numbers coming in 100%, 200%, 300% rise in the normal rates. Food delivery itself, we will see at least in the second half of the day, those matches, if the match days, important days, especially in the weekend part, there we'll see higher food deliveries happening. Alcohol beverages is a no-brainer. Over here, there will be a small important requirement coming in when it comes to wine, whiskey, or whichever the choice would be there of beverages. And airlines, that is something where the most of the host cities, if you look at it, their rates have actually gone up. We checked the 7-day forward rates and they have gone up through the roof. 10,000 rupees for a normal one-way flight coming in for any metro city. Then we have e-commerce, which is important because brick and mortar stores would be coming less. So a lot of online orders would be coming in. So we'll have Nykaa in focus. And QSR restaurants, that is where a lot of deals are coming in, especially on the match days, which we spoke about. Jubilant Foodworks reducing their prices on large pizzas and stuff like that. But there are certain places, Harsh, where the consumption might get stumped. Now, which are those consumption areas? Apparel and retail. I had spoken about the brick and mortar. Daytime, the activities might become less. Jewelry segment, that is something. Only the wedding segment might be actually functional. But the PVR, the movie theaters, no large releases coming in. The last releases, the proper ones were Jawan, Gadar 2. They had a great business. So that might be a lull period. And theme parks, who wants to go when the match is coming in? You go to your nearest bar, pub, or at home with your family members. So we might see kind of, like Imagica or something like a Wonderla, people might be going less to them. So these are the places where the consumption might take a hit. But overall, the entire team at ET now is very excited for the World Cup to start today.
Absolutely, and we're all gunning for Team India, of course, as is the rest of the nation. A billion eyes on the screen or on the pitch, one of the two. Back to you guys.
Thanks.
Yes, yes, absolutely. Thanks both of you for analyzing both the World Cup schedule and of course the business of cricket as well. On that note, let's take it across to Naresh as well as Kunal. And before markets, Kunal, I know you're going to Ahmedabad for some of the matches for sure. I'm sure you are.
I have plans.
You do?
I have
Is the India-Pakistan match? Are you going to be the envy of the whole office?
It's on my list.
Damn.
Are you going to sell the tickets for even triple the price that you got it at?
This is not
never.
for selling. This is for enjoying.
Yeah. Okay, but I don't know if you're enjoying what's going on in the markets right now, because you could say it's a bit of a break, a pause, a consolidation, particularly with the broader markets, Kunal. What's going on?
I think the last 2-3 days have been a bit more, I would say, concerning for the markets, because we've managed to break a lot of psychological levels. 19,500 on the Nifty. We've managed to retest almost retest at 90,300 mark, something which we tested in the month of August 2023, when the first phase of correction started off after 5 straight months of consecutive uptrend. But then again, the bigger concern is the mid caps and the small caps, which have started to show signs of weakness, some fragility, which was not the case over the last 5-6 months of this market uptrend. But yesterday, I believe that the indices were showing signs of extreme oversold nature in terms of indicators. Many of the market breadth indicators were also getting into an oversold zone. So had changed my stance from being on the short side to booking profits on the short side. Now I would expect a reasonable bounce on the index. At least a 250 to 300 point bounce is what I would expect for the Nifty. So somewhere closer to 90,700, 720 is what I would expect the index to probably come back to in this leg of a bounce.
Right. Right, okay, let's take it across to Naresh as well. Naresh, we're going to talk a whole lot of cricket through the show, so let's talk markets first. The recovery in HDFC Bank, Naresh, and the pressure on ICICI Bank and Axis. Do you see any of that remaining or seeing a follow-through?
So I would not expect much of a follow through in ICICI Bank and Axis Bank on the downside. They've both come to very important support levels, and also could be a one-day move on Axis Bank yesterday. The stocks saw a 4-5% cut. 980 to 995 is a strong band of support from this area. I would expect it to go back again to a new all-time high. So positive on Axis Bank. ICICI Bank has been sideways, has not been able to show momentum, but 900, 920 is going to be tough to break. So overall, expecting a bounce in the whole banking space. HDFC Bank needs to be seen whether it can go all the way to 1600 for now. But first indications of a short-term bottom being made here and finding of a new range. But overall, the markets look interesting in terms of the fact that yesterday was a good reversal on the US 10-year yields as well as crude as well as the US indices. So overall structure is set up for a bounce. Yesterday shifted to buy, maintain a buy on the Nifty. Now going forward, I would expect a bounce towards 19,700, 750 levels.
All right, let's get stock specific then and find out what exactly is on our chartist radar. And Kunal, what are you picking out this Thursday morning?
I'll go with two buy calls. The first one is Avanne DMart, the stock which has done quite well over the last couple of days, showing signs of strength, confirming a strong breakout above the 3800, 3850 mark. So would look out for targets of 3965, stop loss at 3820. Traders could look at a fresh buy even at current levels. And from the IT pack, I strongly believe that many of these large cap IT stocks could probably get into a strong phase of a bounce. So HCL Tech is something which I would pick up from current levels, targets of 1266, stop loss at 1250.
Right, and Naresh, what stocks would you recommend this morning?
First is a buy on Indigo. The stock has been showing signs of reversal from that 2380 to 2400 mark. Out here, it's like a breakout would be happening about 2420, 2430. And with the crude fall yesterday, this becomes a short-term reversal confirmation even on Indigo. Expect a move towards 2550 in the short term, stop loss at 2360. Second is a buy on Axis Bank, a good risk reward trade here. The stock is corrected and come back to retest the breakout levels. A fresh move should again start towards 1100, stop loss at 980.
Let's address some of the other stocks which are going to be on our radar this morning, and Ayesha joins in for exactly that. Ayesha, let's start off with Marico first. The revenues have come in a little lower marginally on a year-on-year basis. It seems like price corrections, that's the drag.
Oh, well, yes, it's not a good number coming in from Marico, at least as far as the Q2 commentary is concerned. And we have seen last many quarters as well, it's been on the weaker side and there is no sign of improvement, and that comes as a bit of a disappointment for the brokerage community because they were penciling in a growth from Q2 onwards, a recovery, but that seems to be pushed to Q3 and onwards. Now, in terms of the numbers, the top line was weaker than expected because the volume growth was actually quite weak in the domestic market. It was the profitability that came largely in line, or at least the commentary around that was something which was encouraging. Now, in terms of the top line, the lower growth in Q2 is largely owing to the weak show in the domestic edible oil market, wherein Marico saw a low single-digit volume growth versus the estimate of high single-digit growth that the street was penciling in, and as a result of that, their expectations of growth in Q2 have been now cut. Earlier, street was expecting there will be a revenue growth of 2%. That's now been slashed down to 1% decline coming in. Having said that, the international business has performed okay. So if you look at the international business, they are expecting a double-digit growth for the full year, and the margin guidance is something that they have maintained as well. Separately, in terms of the rural recovery as well, the commentary suggests that the pickup has been happening lower than expected. So that's something that the street would not like. If you look at the international business, they are expecting that there will be a decent growth to come by there as well. But overall, it's a weak set coming in. The stock is trading at around 44 times forward earnings. Despite the kind of weakness that we have seen recently in the stock price, it might see a further slide today.
Yeah, because it's definitely off from its 52-week lows. 462 thereabouts was the 52-week low on the stock. If we can just bring up the intraday chart. So from there, it's seen a decent recovery, 570 odd. So that in itself tells you that there is room for further disappointment, especially like you're saying, Anisha, that I think Marico was the first one to flag off the rural slowdown. They were the first ones to report the volume dip, right?
Correct. You were the first
Yeah.
ones to report that as well. Of course, it was followed up by Dabur and other people also talking about it. And now as well, this weakness might percolate to the rest of the names as well, because a couple of days ago we saw that upgrade come by for Marico and people were expecting maybe the turnaround is likely.
Yeah.
Clearly pushed down the lane.
Okay, that's Marico. But that aside, then let's focus in on Divi's Labs. And Bernstein has come out with their view, not looking good. They've got an underperform. And Anisha also talking about how growth is not supportive of the kind of valuations that it commands.
Yes, because Divi's always trades at a premium, and the street was giving them that value because the growth pipeline was quite strong at one point of time. That seems to have come off, because that's what the worrying point is for Bernstein. They're talking about that the markets that Divi's is present in is actually growing slower than the rest of the businesses as well, and that's why they've initiated coverage with underperformed rating. The target price is 3,064, implying a down of around 18%. Yes, they are global molecule and small molecule APIs, but they are exposed to the slower growing segments in CDMO, and the NC approvals also that has been coming in. It's actually seen a bit of a decline in the last few quarters, and that's because their share of biologics was going higher. In fact, they're saying that 40% of the NCs are launched by emerging biopharma, a segment which is right now untapped by Divi, so we don't know what kind of growth can actually happen from there, because it's not an established trend when it comes to Divi's for now. The approvals are increasing for smaller volume products, but the USP or the stronghold of Divi's was actually in the large molecule business, so that also goes away. The newer modalities, peptides, etc. are seeing high growth, are not in the capability set as of now for Divi's, so that also is an area which they need to improve on, and that's why they're expecting the late stage CDMO industry growth to be around 7 to 8%. Now, Divi's, as I was talking about, is trading at a significant premium to the pure play CDMO and API peers, and multiples are almost 2 times standard deviation higher than what we have seen the 10-year average as well. So clearly a lot of room on downside on this one as well, and at least Bernstein believes around 18% downside is what we should factor in to arrive at a fair value.
Kunal, any green shoots when it comes to pharma? Anything that looks like it's going to be out of the woods and see a consistent gain?
So Dr. Reddy is definitely out of the woods. I think the stock has started to show signs of strength. Divi's Lab is still into that territory where, you know, it's a bit of a flip flop in terms of the price trends. It started to show signs of recovery from the Feb-March lows. Then somehow I think it started to get into that zone of underperformance, a strong underperformance with respect to the other peers. And I think somewhere even at current levels, I would believe that the stock is still not find its classical mojo the last 8-10 years of the history for Divi's Lab. So I'm in sense that it may take some bit of more time for the stock to make a comeback. But the mid cap end of the pharma is actually looking very strong. The likes of Glenmark, Zydus Life, they're looking very charged up. Biocon is something which I believe is also heading towards a classical longer term breakout. So there are many other candidates from the mid cap end which are actually looking quite strong.
Okay, it's a mixed bag when it comes to pharma for sure. Tell you what, we'll take a very quick break. When we come back, we'll have our fundamental experts as well as our research team join in to highlight some of the other stocks which are going to be in focus.
Forward about the stock specific action that we're expecting today. Chakri Lokpriya also joins us on the show. Chakri, hi, thanks so much for making time and speaking with us. Let's begin by discussing Bajaj Finance.
I thought you'd discuss the World Cup first, given that the World Cup fever is on. Chakri, have you managed to score yourself some tickets?
Indeed, waiting, for the first match this weekend. Absolutely. And Bajaj Finance, given the fact that the company is going to do a QIP, it positions itself well to, maintain sufficient liquidity, maintain its margins in the upcoming festive season. So far, consumer demand has been weak across board, except autos. That's a different ball game. So for the market that Bajaj Finance is after, it's been weak. So this will place it well. Its valuations will look more attractive. So in spite of its high valuation, I think given its leadership position, Bajaj Finance will do well as a stock.
Okay, Bajaj Finance and World Cup, we got your view on both of them. But, since we're talking about the World Cup and there's interesting perspectives coming in that, the food aggregators, the online food aggregating platforms are really going to benefit big, the likes of Zomato, Swiggy. Do you think that this is the time for them to really cash in on the World Cup fever, and it's going to be categories across the board in terms of food, that will likely benefit?
Yeah, right from the the food aggregators to the QSRs, both will benefit. But we need to note that in the case of Zomato, they have again priced up. I mean, the competition is again going up. In terms of again now the focus seems to be shifting. You have Swiggy, which is now focusing more on volumes, given that the festive season is coming, which means Zomato will also be forced to do so. Given that the stock has already run up now, and given that now its focus will have to move away again from profitability towards growth, which will kind of put a brake to the stock.
Okay, so that's the word coming in as far as the beneficiaries of some of that World Cup demand that will come in, as well as Bajaj Finance. But since we are speaking about Bajaj Finance and the fundraise which is impending today, what could be the size, what is going to be the impact on book value, and what did it mean in terms of the valuation of that stock? Let's go across to Vamakshi to find out just that. Hi Vamakshi, good morning.
Well, yes, Bajaj Finance in focus today after the company is expected to hold a board meeting in order to consider equity capital raising today. Now, keep in mind that this capital raise is coming in after nearly 4 long years for Bajaj Finance. In fact, Bajaj Finance last raised rupees 8,500 crores in 2019 when its AUM was 1.4 lakh crores. Now with this capital raise that was just before COVID and the slowdown that was seen during COVID, Bajaj Finance was well capitalized. In fact, the tier 1 ratio is even today is nearly around 23%. So largely brokerages have highlighted that the capital raise at this juncture could be on account of several factors. They've listed down a few factors. Number one being the strong visibility as far as growth is concerned over the medium term. Now keep in mind the company also came out with its Q2 update yesterday and the AUM grew by 33% on a year-on-year basis, beating its own stated guidance of 29 to 31% growth in the AUM. Apart from that, another reason why the fundraise could come in at this time is the fact that capital infusion could be taking place in Bajaj Housing Finance subsidiary before its listing by 2025. The company could also be gearing up for competition from new entrant Geo Financials. Apart from that, they will also might be looking to raise money before the national elections. So all in all, those were some of the expectations with regard to the capital raise, but CLSA believes that nearly 10 to 13% book value per share accretion is expected if the capital raise of nearly 10,000 crore goes through. And even after this capital raise, the return on equity for the company would be in the range of 21 to 22%. Largely, brokerages are appearing to be quite positive with regards to this capital raise, and that is the reason you should keep an eye out on Bajaj Finance.
Thanks very much for giving us that view, Vamakshi. But let's move right on. And Harsh, it's not just cricket that's keeping you very busy. It's also the bank Q2 updates because they're pouring in thick and fast. What are the latest ones and what do the updates look like?
Right. Been quite caught up. Let's quickly move on. Bandhan Bank, let me take you through the numbers there. We're looking at advances growth of 12% on a year-on-year basis, but sequentially it's gone up 4%. Now they've guided for a 20% growth. So the 4% sequential uptick clearly demonstrates that they are going in that direction towards that 20% growth mark. So at least there is hope in the second half of this year that they'll clock that 20%. Deposits, meanwhile, have gone up by 13% year over year. Again, 4% very healthy sequentially. So definitely a positive coming through for Bandhan Bank. Both sides of the balance sheet growing fairly well in this quarter. You're looking at the deposits largely aided by the retail deposits, which has gone up by 13% year over year, 7% sequentially. And therefore, what we've seen is CASA improving. So the bank has largely delivered on that loan growth, at least in this quarter. Let's quickly move on. J&K as well. Advances growth up 16% year over year, 4% up sequentially. So definitely positive again from J&K Bank. That growth continues to get clocked in. You're looking at deposit growth as well, up 9% year over year, not looking too great. or rather slightly muted on a deposit growth front. But when I'm looking at it sequentially, 4% uptick in terms of deposits sequentially. So healthy growth coming in there as well. CASA has grown 1% year over year. It shrunk a bit marginally on a sequential basis, and therefore overall the bank seems to have delivered a good set of numbers. Quickly moving on to PNB, on a large balance sheet, far larger than both of the other ones we spoke of, 14% year-on-year growth, largely in line with what they've guided for. Deposit growth too at 10%, again exactly where they've guided for. Deposit growth up just about 1% on a sequential basis. CASA has gone up by around 2.5% year over year. Again, it seems like credit as well as deposit growth is sustaining overall for the industry as well as for PNB.
It seems like at least for now, it's all hunky-dory for the entire financial sector, Bandhan Bank, JNK, PNB. But to add to that, even RBL Bank came out with a solid set of growth numbers that we have seen. Of course, the growth is picking up given the base was also low. But Chakri, your view on this entire second-tier rung of private as well as public banks and the kind of updates we are getting from them?
In the case of public banks, they're clearly benefiting from the increased government spend. The government is spending on railways, water, defense, infrastructure, roads, all these things. And if the cumulative capex is up about something nearly up 50% over the last 1 year. Now, and most of the borrowing is coming from the PSU banks and coming after a lull of the COVID, post-COVID, etc., repairing their balance sheets. Now, loan growth is picking up, and this is high quality loan growth, given that, whether it's defense or water or infra, government is the backstop, so which means NPAs are going to be in control. And the valuations are still very attractive. Even after all the run-up, they're all trading under one-time book value. And therefore, I think all the PSU banks are well placed.
Which is your favorite? A lot of PSU banks are well placed, but they have run up as well, Chakri. Where do you see value the most?
Still, even you look at Bank of India, Union Bank, Canara Bank, and of course the large State Bank of India. For all of them, State Bank of India still trades at only about 1-time book value, and the others are under book value. So I think they can all trade much higher like they did a few years ago.
Meantime, let's also get in a sense then from you, Chakri, as to how you're looking at the entire manufacturing boom really benefiting India. Do you think that a lot of it has already played out, or that there's a very long road to go and that a lot of the companies that really excel in this space can stand to benefit in the long haul?
Like you rightly put it, it is a long way to go because it's still very beginning. The manufacturing renaissance is very new. It's actually not even renaissance. It's the first time India is doing with PLI is benefited largely, and also the import substitution is benefiting largely. The many new sectors like the electronic EMS sectors, companies like Avalon, Keynes, Dixon, all these companies are benefiting from that. And the traditional companies, which is Bharat Electronics, they're not just defense, they're also doing other engineering products, which will help broaden their scope of services. So now these companies are going to grow revenue at like 35% plus for the next at least 5 years plus, earnings in the same neighborhood. So which means, and with their product mix hopefully improving, they can trade at high multiples. So I think still there's a long run to go.
All right, that's the view coming in on that entire sector. But moving right on, yesterday we interacted with none other than Vijay Kedia. He spoke about his recent investments in infrastructure companies. Which ones are they? Let's listen in.
Like I've invested in a company, two infra companies. One is debt-free company.
Okay.
And
which is the debt-free company?
The Om Infra. Okay. I recently invested. And it's not a recommendation.
Yeah, of course. We are discussing the stock.
So it's a debt-free company. Very minor debt, maybe short-term debts are.
That's there. Working capital.
Working capital debt. And another which I invested a while back, that was Patel Engineering. It was having some debt in its books. But now they're reducing their debt. At one point of time, they had a debt of around 5,000 crore or something. Now it is somewhere around 1,700 crore, 1,800 crore.
That was about the small cap stocks, which Mr. Vijay Kedia likes, and patience is the biggest virtue that you need to have in the stock markets. That's what he was talking about as well. But
Ayesh, let me come to you and talk to you about what's happening in the market right now. And of course, one space which is seeing quite a bit of excitement is pharma. Talk to me about which are the stocks that look good to you on the screen.
So as of now, we are seeing a better price action in the mid-cap pharma names. So something like Granules, which has slowly and steadily made a move from 330 levels to 360, steady uptrend here, and starting up a longer-term uptrend. The stock has consolidated for the last 2 years and now making a turnaround. So this could be a stock which could slowly go towards 400, 450 levels. So Granules India is one. Second, looking out for something like a Aurobindo Pharma once it starts making some bit of a dip or some consolidation, because the leaders have clearly been Lupin and Aurobindo Pharma, as well as a Glenmark Pharma, which have continued in the trend. But the larger names are slowly and steadily also making some bit of a recovery. So out here, Sun Pharma has been a slow and steady mover, but once it crosses 1200, that would be a game changer. That would be a high crossing to 2015 levels. So that would be interesting in the large cap space, but in the mid cap space, as of now, Granules looks the most interesting one.
Okay, meantime, just reading some interesting newspaper headlines, and it seems like Audi's retail sales have risen 88% from Jan to September. You know, luxury demand, and this is something, Chakri, that we've been talking about through and through, that premium demand, be it across categories, has really been holding out quite well. Is there anything, you know, if you can elaborate a little bit more on this theme, or share with us any data, or run us through any companies, stocks that you see really benefiting? Because even when we had M&M in the studios, they were talking about how that premium segment really is a standout.
The premium segment is a standout, and in Indian stock market, as far as automobiles is concerned, we don't really have premium auto. Maruti caters to the mass and mid segment. And if you look at the two-wheeler autos, you know, again, it's the same story. Now, incrementally, you have companies like Bajaj, Triumph, Hero Honda, Harley Davidson, etc. And so those are very incrementally, very small, tiny portion of the overall revenue. But still, passenger vehicles, just as a space, still looking strong. Two-wheelers, very good. Commercial vehicles, because infrastructure spend is being so strong, commercial vehicle sales are picking up. And so, which means whether it is the only name probably you can talk about, which is in the luxury space, is Tata Motors. Tata Motors, again, is going through a major project revamp. Jaguar is out of the picture. It's only Land Rover sales. So a combination of Land Rover sales plus its CV business, I think Tata Motors looks okay.
Okay. Chakri, since we are in the World Cup mode today, are you in for a round of some rapid fire questions coming your way?
Yeah, sure. Why not?
Okay, so which segments do you think can go through a purple patch in the near term?
I think it's the electronic manufacturing sector.
Okay, do you think IT sector will continue to be under covers for now? A bit of a rain coming in for the IT sector?
IT sector is, I think, next 6 months, I think it'll tread water, not really go anywhere.
Sector is likely to see the maximum amount of Yorkers coming in.
I think it is, actually, it is probably the IT and pharma. If the US goes through some kind of a recession, then they will get hurt the most.
I'm going to also pitch in then. And Chakri, do you think that the mid and the small cap pitch is still in a good field?
Absolutely. I think it's still sixes all the way. So you still have to be in there.
And do you think that the CapEx theme will continue to hit boundaries?
Yes, I think CapEx is a long way to go. I think the government is doing a phenomenal job in railways, defense, infra, roads, and I think we need to invest in all those sectors.
Which sectors do you think are good for a power play, aka a tactical trade for short term?
Power play is still the power sector. And in the power sector, I would still buy REC Power Finance because they're financing just about any power company. So which means it's easy to buy them.
These are some stellar questions, by the way, I have to say, by Sharad. Should we call this version Anisha apple juice with Anisha, Ayesha and Avanne maybe? But, you know, Chakri wanted to get in another question. Do you think that investors have a chance to get an LBW in, say, the PSUs and the defense space?
Defense is very unlikely simply because if you take a company like Hindustan Aeronautics, after all the run-up, it still trades at 18 times. It has revenue visibility for the next 5-7 years. So the chances are low. So I think they're playing a great game.
And will FIIs make a comeback in the second innings? I promise you this is the last question.
For that, the rupee needs to settle and US needs to get its act in terms of calling a peak of its interest rates. Until that happens, it's unlikely we're going to get an FIIs coming back.
Okay, so if I ask you, Chakri, for the record, which is that one large cap which you think is on the front foot and which is the one which is on the back foot?
The front foot large cap, I think, is still SBI. And on the back foot, it's still IT, so whichever you can take, Infosys or TCS would probably be on the back foot.
Okay, let's hang in there and let's take it across and find out what are the other stocks which are in focus. And Naveen Fluorine, it seems, is going to be in focus. The MD has resigned from his post amidst the series of resignations of late that we've had. Let me take it across to Lisa and find out what could be the major business impact, if at all, that could come by. Lisa?
Right, so Naveen Fluorine will be in focus. As remember last week, Rajesh Welling, who's the MD, he resigned and the stock had tanked around more than 10%. The management, they had a con call yesterday post-market hours and they tried to alleviate the concerns of the analysts as well as investors because Rajesh Welling, he was an important force and driver behind the capex plans in the last 3 years. There were some concerns and the management said that there won't be much impact on the capex going forward and future capex programs, if any, if that gets delayed, it will be more on the back of global macro concerns. So yes, and they also added that they will be looking at external candidate and it is too early to decide the payout structure for the candidate and it will dependent on many strict criteria. Jefferies also came out on a note on Naveen Fluorine and they have reduced the target price. They have downgraded it from 5,475 earlier to 3,675. What Jefferies highlighted that they are seeing some concerns in the execution challenges and also they said that the management has not undertaken any concrete steps to address the high top management turnover because in the last 5 years there has been a lot of churn happening, both CEOs, CFOs, the top level management. So yes, capital discipline is in focus and they expect a slowdown in the expansion plans and also execution challenges going forward and they have cut the FY24-25 EBITDA by almost 13% on the back of the delays in commissioning of new capacities which will also flow into lower revenue going forward for the company. So yes, we are expecting a negative reaction from Naveen Fluorine on the back of this downgrade coming in from Jefferies.
Okay, two triggers there for some weakness on Naveen Fluorine. But here's Hemang Jani telling us what he makes of Avenue Supermarts in the light of their quarterly update and then, of course, how the brokerages read into that.
The revenue per square feet, which remains subdued in the recent past due to the addition of the large store size and the weak discretionary spending, there is some degree of pickup over there. And we think that, and these valuations down, the comfort will not be much, but for, somebody who's delivering and where there is a decent amount of growth visibility because of the higher store addition, I think it would make sense to add into Avenue Supermarket at this price for a maybe 15 to 18% kind of an upside.
All right, let's get a move on then and also discuss the outlook on other individual sectors and the hotel space in particular. Forgive us, Chakri, the World Cup fever is on, so we keep going back to that point. And given the fact that, exorbitant prices is what they're charging, a lot of hotels as well seem to be booked out. What's the view then on the likes of Indian hotels, Lemon, Chalet, etc.?
Again, with the World Cup thing, yes, indeed, all these hotels are going to face very strong demand. We have very strong demand rather for the next several months. And then you have the holidays and then you have before that the festival season. So I think they're doing extremely well, the wedding season indeed. So banqueting across various categories is very strong. Pricing is very strong. Hotels as a sector, Indian hotels, Lemon Tree, Chalet, I think all these three companies do very well.
That's about the hospitality segment. We just got the updates coming in from loader developers as well, and it looked like a good number coming in terms of the pre-sales as well as the fact that they've managed to reduce the debt on a sequential basis as well by some 500 odd crores. So a good update coming in, and even from Sobha, which has been reeling under pressure because of other issues as well. They've issued a clarification to us saying that a lot of reports are speculative in nature, and the update that we got from Sobha in terms of the Bengaluru market and the kind of uptick we have seen is also quite strong. Chakri, within the real estate pack, what's the favorite?
Shobha still looks good, notwithstanding the current confusion. Hopefully that is clarified by the management. If indeed it's speculative and there's no merit to what they're saying, then which is basically related to building without permissions. Because the Bangalore market is still very strong, still largest market for Shobha. And I think the company looks good. And Shobha is even low there.
Okay, fair enough. That's the view coming in on the entire real estate space. In the meantime, let's also get in some chart checks going then. And Kunal, given yesterday's move in Axis, SBI, IndusInd Bank, quite contrary to what we witnessed in an HDFC Bank and a Reliance Industries, what's your view on some of these heavyweights?
So I believe, what had happened is in the last two weeks, Axis Bank and IndusInd Bank were actually one of the better performers. The selling was quite prominent into the likes of HDFC Bank, Kotak Bank, particularly from the larger cap private sector banking names, and even ICICI Bank to a larger extent. These were the three key names which were dragging the Bank Nifty on one hand, but the outperformance in the other two names, Axis and IndusInd Bank, managed to just settle off or balance out the Bank Nifty movement. Now, yesterday was one of the classical days where there was a sharp selling which had happened into these two names, Axis as well as IndusInd Bank, and I believe that could probably be a more of cutting off positions from the the larger cap ones or the ones which have been performing. And to offset that, the underperformers, they started to show signs of pickup of price action. So that I believe probably be more of a balanced price action within the Bank Nifty. I don't read it too much that the private sector banks like Axis, etc. were going to a sharp selling. I would believe that it could be just a one-off day where these stocks had seen a sharp selling and they could stand to recover quite smartly from here on. So I would believe that they could actually be good buy on dips candidate from current levels.
Okay. Well, the World Cup fever has just about begun right here at the ETNR studios at least. And one of the official sponsors for the World Cup was IndusInd Bank. We caught up with the MD and CEO Sumant Katpalia, and he shares with us his own prediction as to who's going to clinch the cup.
I believe this is a very large opportunity for IndusInd Bank to refresh and reignite its brand.
What are your personal favorite moments from all three cups which has been won by India? 1983, the 2007 Cup, 11, or now you're expecting one?
So I think 1983, I think underdogs came in and won the World Cup. I think that was the largest. And I think the first win over West Indies changed the tide. They got the confidence back. I think 2011 was the Dhoni's inning, and I can never forget the 6 which he ate as the winning shot. And I think that was something spectacular. And I think you also remember the Gautam Gambhir innings, which nobody talks about.
Definitely.
But I think was a game, the changing moment of the game, in my opinion. And I think 2007, we were nowhere in the T20, and the underdogs again won it. And I think 2011, we are not the underdogs. I hope and I wish the team well that we will do well.
But this time we are favorites. What are your expectations this time, and which players you are watching?
I'm always optimistic in life, and I think we will win the World Cup.
Okay, so we will win the World Cup, of course. It's been a while, the 2011. So hopefully this time around we will clinch the cup. But shifting focus to what's happening in the FMCG space, and I'm not sure whether the World Cup is going to enthuse the rural markets or not, but for now the recovery there seems to be very, very slow. At least that was the indication coming in from Marico as well. Chakri, do you think it's better right now to just be in the stocks and the sectors which are more urban facing rather than rural recovery, because it's taking longer than anticipated?
Yes, rural is weak, and even if you look at things like tractor sales are weak, and so the rural spending is unlikely to pick up in the next quarter. So maybe 2 quarters down the road in the early next calendar year. So, and all these stocks the FMCG stocks are not cheap, inexpensive stocks. So nice, good companies, but rich valuations, so we'll stay away from the staples.
Okay. Chakri, also wanted to get in a sense on what is it that you are making of the trend within the smaller private banks. The larger ones, of course, are taking a step back and not in favor right now, as are the PSBs. But what about the smaller private banking names, given how the quarterly updates have panned out?
The smaller banking names, in the private space have been quite a mixed bag. You look, each one of them has, is a company-specific issue. They are not benefiting from any sector trends like how PSU is benefiting from the corporate spend and infra spend. Each one of them has, for example, City Union still has some slippage issues. Federal Bank is still fixing some of its asset liability matches. So I think that is the trend. So I think it's, I don't really see the point in focusing on mid-cap private banks when there's so much to play for in the PSU banks.
Okay, Chakri, we'll let you go on that note. Thanks as always for taking the time out and joining in today. Just counting down to what the pre-open rate would be, and it seems like it's going to be at least a quiet start. So maybe we're going to at least do away or stall the kind of fall that we've been seeing off late. By the way, Asia is only powering up even further. Just want to mark what those markets are up to. You've seen that big retreat in bond yields overnight, and that's definitely rubbing off on the Asian sentiment. It's a 350-point move that you're seeing for the Japanese Nikkei. Korea as well is holding up almost about 1%. About a 100-point move coming in for Hong Kong as well. And Shanghai is the only one which is a little bit tempered. But even periphery markets like Australia are actually holding up very, very steady in trade. So fingers crossed, hope we also gather that same sentiment and see a buck up. But Kunal, if we do have to recover further from here, you think once again it's going to be HDFC Bank like yesterday, which leads the recovery?
I think it should be a part recovery in HDFC Bank, but I think a more broader recovery across the markets, because what's actually happened in the last couple of weeks, it's the sentiments which have happened more for the traders and investors. So I think that should probably get a revival. Now, if oil, for example, which has retraced more than 10%, and if dollar index also follows in a similar path, and if the central governors they don't get into any kind of a major negative action, then I think it should result into a very strong rally across the globe. So I believe that this may not just be a short-lived recovery, but this may actually be a very strong recovery, provided the two events they don't dampen the markets as such. And I believe HDFC Bank, Reliance, the likes of ITC, I think these stocks could play a very strong role in the revival.
Okay, actually, so that was about HDFC Bank, but that gets me to the next point, because ADRs were seeing quite a bit of move yesterday. So for HDFC Bank, of course, there was a 3% move, partly follow-up of what happened in India. But more interesting was actually Infosys, which saw a move of around 2.6%. Come in, Naresh, on the chart of Infosys, any amount of strength that you're seeing on that chart?
So more like a recovery for Infosys. The stock has corrected from roughly around 1520 a couple of weeks back down to 1420, and now making a recovery which could take it towards that 1500 1520 mark. But that is the next zone of resistance. If it can sustain 1520, that would be the first indication of a higher top being made. So for now, expecting a recovery to 1500 1520. And the factors in most IT names, we see price action going beyond important resistances post the numbers. So for now, we'll wait for the numbers but before numbers, 1500 1520 is the upside which could be possible.
Okay, let's get some cricket fever in. Kunal, if I were to ask you in cricket terminology, what are the sectors you think will go through a purple patch? Any that look visible and evident?
Well, I strongly believe that it has to be PSUs at large, and within PSUs, it should be private PSU banks as well as defense names.
Okay. Any stocks that you could identify?
BEL, HAL from the defense pack look very strong. From the PSU banking stocks, I think there are some 11 or 12. So we can probably select maybe the top 3-4 names there: Bank of Baroda, Canara Bank, and SBI.
Okay, what about the mid and the small cap pitch? Do you think it's in a good field?
I think it's into a very good field. Now, the only point is that like every innings, even this zone is more of a consolidation. So after hitting maybe a century, I think it's good time that these mid caps and small caps consolidate for the next maybe last 10 overs of power play.
Love the way you put it. Okay, what about your outlook on the pharma segment? Can the strike rate go through the roof?
I think this is more like a less stocked sector, but a very high performing sector. And many of the large caps, traditional large caps, they are actually not participating. So there's a strong room for the pharma stocks to make a very strong upside.
Okay, let's talk about the one that has been hitting it out of the park, and that's the capex theme. Do you think it will continue to hit boundaries and sixes?
I strongly believe so. Look at it this way, Anisha, that even in this last 4-5 days, L&T is not even buckled by even a 5% selling. So that itself tells you, and the stock has been making new high for itself. So I strongly believe that this is a theme to sustain for not just the next 6 months, but for the next couple of years also.
Okay. What is the silly point then for investors, and where do you think caution is warranted?
So I think it's only global factors which are actually being the more concerning point for the market. So whether it's something related to US indices or the dollar index as well as crude, I think these are the only 3 points of concern for the markets right now. But if these settle down, then I think there should be no silly point.
And which sectors do you think are in for facing some yorkers?
So it still remains to be IT and private sector banks, because if you look at it in the last 6 months of performance, these are the only 2 sectors which have actually been disappointers for the markets.
And an LBW in defense?
LBW in defense.
Caught behind?
Caught behind, yeah, I'm actually caught.
Okay, we'll give you a little bit of time to think about that one, but I have questions that you're more familiar and comfortable with then, and maybe I'll take it across to Naresh first. Mid-cap trading ideas, it's 9:02. So Naresh, we're sparing you the rapid fire in cricket. Give us your mid-cap idea.
So the mid-cap idea is a buy on Bandhan Bank. The stock has been showing a lot of relative strength over the last 2 weeks. Even when the Nifty corrected, the whole banking space corrected, the stock has been strong around that 250 mark. 245 to 255 has been a range. Expecting this to break out and head to the recent highs of 270-75 levels. A buy at current levels with a stop loss at 245 and a target price of 275.
Right. And Kunal, what about your mid-cap strategies?
So I'll go with sugar stocks. Balrampur Chini as a buy. The stock is holding up quite well about that 420 mark, even in this last couple of days of choppiness. Would expect targets of 455 for Balrampur Chini, stop loss at 417.
Okay, let's tell you what else is happening outside the world of markets. And flash flood fury in North Sikkim continues. 14 people have been confirmed dead, and over 100, including 23 army jawans, are still missing, while the capital city Gangtok is cut off. Several roads and bridges got washed away as floods wreak massive devastation in the northeastern state. Rescue operations, of course, are currently underway. And the World Cup is set to witness one of the most unique FIFA World Cups in 2030, as it is set to be played in Europe and Africa, with the surprising addition of South America as well. While Morocco, Portugal and Spain will be the joint hosts for the marquee event, games will also be played in Uruguay, in Paraguay as well as in Argentina. And Neeraj Chopra added to his Olympic and World Championship glory as he won the gold medal in the javelin event at the ongoing Asian Games in China. And Jena Kishore made it a double podium for India as he finished on second spot and secured a silver medal in the same event. Today as well, women's archery team entering semi-final. A medal is assured for India.